All right, good morning, guys. This is video 2 of 3, and today we'll be talking about how to draw the perfect support and resistance using SMC concept. What this simply means is that the normal support and resistance people draw, we are going to be doing it better, but this time around we are going to be using uh, good market analysis to do that. So we'll not just do it blindly like how other people are doing it. Okay. All right. So for all this, I'm using crypto. Okay, you can decide to use anywhere, it still works. All right, so I talked about the concept of time frame yesterday, so I won't go much into that. But then the higher the time frame, the better for you. It could take a long time for trade to trigger. Okay, but then I think it's one of the best method of trading where you have to be patient enough to wait for your trade. All right, so I'm going to be using 4 hour for this support and resistance. I'll be drawing 4 hour support and resistance. I'll be drawing. Okay, so let's go to market time frame. The time frame, let's choose 4 hour time frame. All right, very good. Now there is a concept of break of structure. I want to make it very simple. Break of structure is simply price was going down. Okay, price was going up. I mean, as we were going up, all of a sudden we have higher high, higher low, something like this. Higher low, higher high, higher low. Unfortunately, this can come for higher high because I think this is still ahead of this, right? Yeah, it broke above that. Okay, so right now we are having a ranging market presently. Price bouncing between this line here. So we're having a ranging market. So we're going to be drawing a support and resistance based on this 4 hour. Because if price come to this place up to this point, it's still a lot of pips here. Okay, so now the first thing you need to look out for is to look out for what I will call break of structure. A break of structure was where price was going up this way, it formed a high. There is a particular place, this was the highest here, right, before coming down. Let me remove this was the highest here before price came down to this level. Then it moved back to this top, then formed a low here, then move back to this top, then form another low which has not broken this low yet, right? And this has broken this top here, right? But presently, until this low is broken, we will consider this market still bullish, because once the low is broken, then we'll not consider it bearish. But presently, this is the low that formed this high, this is the low that formed this high. Okay, so now that we have that, what we're going to do is now, this is a 4 hour time frame, right? So good. So what I will do is I'm going to wait for draw a bar from here. I want to use a bar from here. This is the high that formed this particular low here, right? Sorry, this is the high that formed this low here. This is the high that formed this low here, this particular low. Okay, so what I will do is I'm going to draw a line there and be watching that line for a breakout. Okay, so when anything closes above that, I'll be expecting price to go above that. Okay, now this break of structure, I'm going to look for the nearest order block here, the nearest order block close to that break of structure I drew just now, the nearest order block. Now the nearest order block is just above. If you look up here, you will see it here. Okay, now for those who have been in my class before, you will not have said this over and over again. I said the best order block is the one that has an imbalance in part of the order block, making the what they call it, the fair value gap. part of the that block is also making the fair value gap. That's the best order block you can draw out. Example is this. Let me give you an example. This is a fair value gap here, right? Then the order block is making part of the fair value gap. I'm using a higher time frame, so I will not use order block. I will not use a fair value gap. Rather, I will draw my line here. Okay. All right. So I'm going to use the rectangular tool and mark out the complete order block here. Mark out the complete order block. We can adjust it on the lower time frame. All right. So this then becomes what I will call. This then becomes what I will call my support or resistance line. Okay. If we break above this, it becomes. If we break above this, it becomes resistance. It becomes support. Break above. It will break. If we do not break it, it becomes a resistance line. We did this for above. We are going to go and do this for below. The reason why I did this was because this is the highest before. This is the break of structure, and this is the next order block we are going to have. So if price is going to do anything, it's going to react at this exact area. Now we can do it back to check the history. What I mean by checking the history is to see if it runs back to anything behind. That's the past. The best way we can do this is just double click on this, then extend left here. If I tick this box, it extends it to the left. Okay. Now I'm going to lock it so I won't be able to move it. All right. So we want to check if price reacted there in the past. That's why we extended the line. You can see it has served both as a support and also a resistance at a particular point. It served as a resistance here. It served as a support here. Price bounced here, entered here. Okay. All right. So now that we have this and we are sure of that, we have point 1. I usually do 4 points or 3 points, but then don't be lazy. You can do as many as possible. Okay. This is the first point. Then let's go to the top, the immediate top of this place. Now these are the points that we are going to be expecting price to take to have a kind of reaction once price hits it. Okay, so that's why we are going to be doing 3 points. So the next thing we are going to also be looking for is where the price break out here. Okay, where the price break out here. All right, so something of this nature. Yesterday I talked about tracing the origin. Oh no, not, it's another class entirely. Okay, so where the price break here. All right, so let's go down because this is where the price is at this current particular point in time. Okay. All right, so if we look at this is the low, right? Then after this low we have a high. This is the high. Now we are going to look for where price broke because this is the immediate area in the market right now. Okay, so we are going to look at where price broke here, which is somewhere here. A minute, sorry. Now let me increase this. This will be somewhere here. Because immediately this is the high, this is the last low, went up, down, up. Okay, good. So we are expecting price to come into this box, and possibly a bullish trend because this actually okay. So we are expecting price to come to this place, which it did here. If you look at it here, remember the same thing still occur, a valid order block, a valid fair value gap. okay, but as a higher time frame, I'm using the order block. So this is a valid order block, okay. All right, so this candle came in, it didn't break this low. The moment it did not break this low, it pushed back up, and here we have another break of structure occurring here. All right, so let's draw another line here because this has been taken. This one has been taken, okay, so this is out. I mean, there's nothing inside here. This will be our order block here, where we expecting price to come in to have a reaction. All right, so this is the high. This is the high, okay. Now when you take a look at this, you will see the candle that broke that. The candle that broke that is this green candle here. Is the one that broke this line here, broke the high. Anytime a candle close above it, we call it break of structure, okay. So broke that high, then we are going to trace the origin of this. That's the low of this. We are going to trace it. Now tracing it back, we are going to trace it to this point. This is the low that created the high that broke this, okay. Low that created the high that broke this. This candle did not break it, but this particular candle broke it. So this is the origin, the order block that created the push that broke this candle, okay. So now that we have it, what we do is the same thing goes. Check if it is valid. It is. Part of the order block must make the fair value gap as well. So it is. So what we're going to do now is draw this. I'm going to remove the extension. I'm going to remove the extension, okay. We'll draw this something like this. Yeah. Take note, never make the mistake of entering. You need to do a little bit of order analysis. Maybe you reduce your time frame so that you can find the suitable entry. But for me, if I'm to take any entry from a 4-hour, I'm going to take one from a higher time frame, take another from a lower time frame as backup, and let it rest, okay. All right, so we have two parts that we're expecting price to bounce. So we are expecting price to come to this place up here, or we're expecting price to come from up here down here. So whichever one triggers, stop loss above here, stop loss below here, entry here, entry here. So whichever one works, okay, then take profit will be where we set our entry. Now the most important thing you should understand is market structure. Where is the market headed? Okay, you cannot get a market structure if you are looking at a lower time frame. I would advise you look at a 1-day time frame to give you a broad idea of where this market is going, right? Broad idea of where this market is going. So the ball is in your court. It's as simple as that, okay. So you can do as many as possible. You can use a higher time frame, but mostly 4 hours is okay. Let's do another, so you get the basic idea of what I'm explaining. Now always, to be sure that you drew your support and resistance line properly, always ensure you extend to the left. So when you extend to the left, reduce, price reacted at this place here, reduce, drag, the price touch it, nearly not, price reacted at this junction here, price reacted here, okay. You can see price reacted here before going up. All right, so look to the end, look again and again. See, price reacted exactly at that point. So if you have like 2 or 3 that touch that particular place, you are golden, baby, okay. So let's draw another, okay. You know we use 4 hours, so go back to 4 hours. If you can do like 4, so presently now this is where price is bouncing. So if price manage to break one of this area, retest, you will know where you are expecting price to get to. Or price manage to break one of this area, retest, you know where price is going to get to. Okay, so good. So let's do another so you completely get the idea of what I'm explaining here. All right, so when we come to this place again, look for a break or structure. Price was coming down before start going up. Okay, so the break or structure I'm going to be looking for will be this was the last low. That was the last low. You'll be shocked that I use all my most 90% of my analysis is done on phone. I have a laptop, but I don't use it, or I don't really have the time to say I want to use it. Why? Because if I don't have a laptop, will I not still be trading? Okay, and I have good results, great results, so you will know, right? So, but then once in a while I can use my laptop. I also have a 55 inches TV that I bought for trading because I thought if you have a bigger screen you make more money, but it's a fallacy. Bigger screen I'm using to watch movies. All right, so this was the last low that created the last high. Then all of a sudden price tanked. That's price dumped. Okay, now where did the break occur? The break occurred here. This is the candle that caused the break of structure. Sorry, not that candle. This is the candle that broke the structure because this only came here and went back inside and closed inside. So we are going to be looking for the candle that broke that structure, which is this one. Then we are going to look for the origin of that candle. The origin simply means where exactly did this candle start from, this particular one. Okay, so usually the closest candle, which is the green candle, is what I will use, which is this particular one. This is the particular one I will use. Okay, so now this is not a valid order block actually, because price has already gone into this one. It's already mitigated. If it's not mitigated, it would have been a better thing, a better order block. But then I will still use it because I believe on a lower time frame, price will not have gotten to that place. Okay, so we got that right. So draw this here, draw this here, then double click. Alright, so this will be my third area that I'll be expecting price to get to before chachinging. Okay, or chachinging. All right, so to be sure you know the drill. Double click, extend to left, click on it. It's big actually, so you have to use a smaller time frame to find out where that origin is. All right, so price came into it, retraced back, went into it, retraced back. Remember, just 3 points, one here, another one by that side, and also here. Okay, so now that we have this in place, we can expect price to move from anywhere here. Price break out here, retest. Price break out here, retest, go up here. Or price break out of here, retest, go back. Then you can do another. Okay, then the another will be somewhere below this line where price will get to before going up. So that is it for today. You guys have a great day.